I have beaten the stock market to a pulp. Since 2013, I have outperformed the market almost every year for the last 12 years, maybe with the exception of 1 or 2 years. This is much thanks to some of my big winners, which might have been strokes of luck, who knows, but also the fact that I've avoided losers for the most part. So for what it's worth, I thought I'd share a bit about my process of how I pick stocks. Keep in mind, this is not meant as a success recipe for investing in the stock market, and the fact that I talk about my investments doesn't mean that I'm recommending that you buy them. So this is just my way of doing things and my thoughts, and it should be taken as just that. I don't base my investments on technical analysis, price levels, analyst recommendations or anything like that, or tea leaves for that matter, just so that's said. I like to say that I invest in businesses, I don't pick stocks. I have a quick look at a company's balance sheet, revenue growth, maybe historical price movements and dividend payouts, but that's about it. As long as the arrows point upwards, I'm happy. After all, I don't want the full potential of a business to already be priced into the share price. I want it to be realized in the future. Many will accuse me of jumping into names such as Tesla, Amazon or nvda when the share price was already at the top and they were insanely overpriced. But in all of these 3 cases, it turned out to only be the beginning. And this goes to show that just because a stock has had a big run-up doesn't mean that it isn't a long way left to the top. And the only thing that matters is whether you think the potential of the business is reflected in the share price or if it is still to come. So don't be too afraid of hot stocks or stocks that have had a big run-up. If you look at most graphs of big successful companies or the stock market in general, it's just one long graph going upwards. So thinking you've hit the top, I think, is a dangerous thought. And if the business is great, it can still have a long way to run. Investing ideas tend to come to me, not me coming to them. I feel like I'm not scouring the stock market for investing ideas. I don't have a watch list with 1,000 different companies that I look at. I can be going for a walk, watching a movie, a documentary, trying a new product or services, and boom, an investment idea hits me, and then it's pretty much done. So again, I'm not actively looking for investments. The ideas just come to me as I go about my life, really. My intuition and gut feeling quickly takes over after I have a quick look at the company, and I can invest within 5 minutes or 5 years. The thinking and reflection upon the ideas can become quite intense, and they usually come one at a time. So I usually have one big idea or one big company that keeps me up at night. And I like to take my time thinking about investing ideas, and I feel like most people maybe jump into investments too quickly or are too eager to find investments to spread their money out between. I like to do one big idea at a time. I'm a very passive investor, so it fits me very well. I still remember when I watched an interview with Jeff Bezos back in 2013 and ended up buying Amazon shares a couple of weeks later, or when I bought my Tesla back in 2019 and quickly realized that the age of internal combustion engine cars is probably coming to an end pretty soon. So they come quite randomly. Different ideas come to different people, but this is at least the way I have ended up investing in my biggest performers. Not all my investments stem from these aha moments. Some of the businesses in my portfolio are just simply stable, well-performing businesses with a good track record that offers something that my aha moment investments don't. So if you look at my portfolio, companies like Microsoft, Lockheed Martin or Investor, the Swedish company, simply offer something new to my portfolio. They're just stable companies, growing at a decent rate, and they have great track records with paying dividends and being able to grow their revenues. So they're not going to double the next year or go up 1,000% within the next 3 years. They're just good additions to my portfolio, and they complement my more risky investments like nvda or CrowdStrike or Tesla in a great way. As I alluded to, I think each investment in my portfolio should add something to it and represent something unique. Although I do have a good concentration in the US and tech, which has been impossible to avoid over the last 10 years, and it's been a great ride, so I don't really mind. But a lot of I don't want to have all my investments in one company, one country, one currency, one industry, or one particular size of company. So I don't want it all in big companies or all in small companies. So just for fun, I thought, how fun can this be? But I think we can look at my portfolio, and I'll go through sort of what each company does and what unique things they might add to my portfolio. So we'll look at Tesla. They do EVs, batteries, automation, and AI. It's traded in USD. nvda, data centers, AI gaming, USD again. Investor is diversified investments in Europe, so not US. It's traded in Swedish kronor and it pays a dividend. Microsoft is more data centers, software as a service, search gaming. It's USD still, but it does pay a dividend. Amazon is again data centers, e-commerce and streaming, a little bit different. It's USD. Then we have Lockheed, which is completely different, aerospace and defense, USD, and it pays a dividend. And then my cat is going berserk over here. CrowdStrike is just cybersecurity, high growth, small company, traded in USD. And then Games Workshop is consumer staples / toys or whatever you would say, and it's traded in British pounds and it pays a dividend. So I think diversification is great, and it is the only free lunch in investing at times, but don't diversify for diversification's sake. But I would say make sure that each investment brings something unique to your portfolio and can stand out from the rest a little bit. The management, and particularly the CEO, is also key when I invest. Not in all cases, but I really don't see myself investing in nvda, Tesla or Amazon if it weren't for their CEOs. I listened to multiple interviews with the CEO. Make sure they come off as the smartest person in the room whenever they talk. Make sure they're wise. Make sure they have a sort of 30,000-foot view on things and that they really understand how things work. And more specifically, that they have the sort of detail level understanding or engineering background to actually understand what the company does, so that they can describe the company in details and really go into the weeds to run the business. I'm not going to invest in some laid-back corporate run-of-the-mill CEO that you can just place in any company and they're just going to run the company as any other business, but without having any idea what the company does. So founder CEOs are my favorite, but at least a visionary CEO that knows what they're talking about and are specifically well put together to run the specific company that they run. I also tend to invest in market leaders or the biggest companies within a certain sector. So I guess you can say I like to pay up for quality. Some of the companies that I've invested in were maybe the best in the business, but they were not the biggest, but they have become the biggest after I invested. So some disruptors like Tesla and nvda sort of started as sort of big competitors when I invested, but now they are the market leaders, while some companies like Microsoft or Lockheed Martin has sort of been the biggest market leaders forever. So either market leaders or companies that I, of course, think ideally will become market leaders. And the best combination is really if you find a company that you think already has a far superior product, but is not the biggest company and is set to upset a big industry. Amazon with e-commerce, Tesla with EVs, nvda with their chips, CrowdStrike with their AI cybersecurity, then you're sort of getting the best of both. You get quality and you get high growth and potential disruption. Of course, you usually have to really pay up for that. So the shares tend to be expensive, but for me, it has worked out quite well. Again, not in all cases. And sometimes you invest for the status quo to continue. Microsoft, Lockheed Martin. Sometimes you're investing because you want the status quo to change. So Tesla and EVs, for example. So, and when you invest and your company's obviously beaten out the competition, you need to make sure that a competitor doesn't come along and upstage your company again. So I have to keep an eye on potential competitors to my companies that have sort of become the market leaders. So it's a bit of a dance, but if you can find the market leaders, I prefer that. The most important thing, however, is how I see the demand for the products or services that a business offers. It doesn't matter how great the business is if they are moving uphill. I like to find big secular trends or shifts that I see in society and invest in the businesses that I think will make a profit of that. So follow the money, basically. I don't like cyclical businesses or businesses in segments that sort of just chug along, not much growth. Maybe they keep up with GDP, maybe it's a bit cyclical. I don't like that. I like a big, solid, long-term tailwind to my companies so that the company can do well, but they also get some help from sort of macroeconomics, if you like to call it that. I think this video turned out as unstructured and chaotic as my investment approach and my life in general, but that's how it is. My approach has paid off massively since I started investing, and it has, although chaotic and risky, and there's been some ups and downs, it's been surprisingly consistent. I think I've beaten the market almost every year, maybe apart from 2021, and there was some stuff in 2017 or 18. But I have achieved probably close to 30% annual compounded returns since 2013. So it has worked out. It's not a guarantee for future returns, but that's how I pick stocks. How do you pick stocks? What do you think about my portfolio and my approach? Is it all luck? Is it all skill? Or a mix of both? Thanks so much for watching this video. I might have more videos planned for this channel. Let me know if you have any ideas. Thanks so much for watching. Hope I see you in my next one. Stay safe out there.